Good evening, guys. It's Saturday, January 27th. My name is Dave Coker, and this is Talking About Finance. And good evening, one and all. You know what this is. You know what we're going to be doing here, and you know why you are here. We're going to talk about finance, but the best kind of finance. Finance to make you rich. We don't believe in buying indexes or stocks of any kind unless they pay us to hold them. A dividend, in other words. Money in our hand, cash in our pocket, funds that can be used now. Not the promise of money, maybe, someday, some distant day, in some distant future, some unknown sum of money. It's all too vague. Not suitable for discussion with polite folks like yourself. No, you want money. You want the cash, and you want it now. And I don't blame you. A fundamental principle of finance is called the time value of money. Simply put, $1 in your hand now is far, far more valuable than $1 you might receive at some distant date in the future. Keep in mind, most of the people suggesting you buy stocks without regards to the dividends they pay don't really understand finance. They're just following the crowd. Following the crowd off a bridge, in my view. But you're smarter than that. You realize $1 now can be used in far more ways now than the promise of $1 in the distant future. Keep in mind the old expression, cash flow rules. So let's now talk about finance. The S&P 500 finished up about 1.06% on the week. 3 sectors outperformed the index. Energy took the lead. 3 sectors booked a loss on the week, with discretionary coming in dead last. The VIX traded down on the week to 13.26, started the week at 13.30. The 10-year note closed the week at 4.14%. It was flat and up 0.3% year to date. Oil closed the week at 78.12, up about 6.6% on the week, a big move, and now up about 9% year to date. And once again, guys, you know me so well. Friday morning, guess what I did? Yep, I bought Bitcoin. And I bought Bitcoin the old-fashioned way. I don't know. I'm half inclined to start a parallel purchasing program and buy some shares in a Bitcoin ETF every week, just to help with the demand side. But I got to think about it. Truth be told, it's not a very high priority on my list, since I can still buy without putting money into the pockets of Wall Street. Now, let's find out what me and my buddies, some 50 or so finance professionals from all around the planet, talked about last week. And oh my gosh, I'm so uncouth. Let me introduce us. We are Global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everybody, absolutely everyone in global finance. And this week we're reporting from the City of London. We're reporting from Canary Wharf in London. We're reporting from Amsterdam. We're reporting from Frankfurt. And we're also reporting from Shanghai. We have people everywhere, absolutely anywhere that matters. So let's go. 7 slides for 7 days. And finally, money freaks, assemble. Use your special powers as you know how. Okay, now, I'm really anti-debt, guys, but this is a reasonable question. We know that Mr. Biden has forgiven student debt, and people are starting to ask questions, and I don't want this to happen because the whole system would break down, but people are asking, why just student debt? Why not all debt? Why not forgive all mortgages? Things like that. It is a really, really good question. We know that the American people are heavily indebted. Please don't take on debt. Try to pay cash for everything. It's really just the best way. And sometimes you do have to take on debt, like to buy a property to live in. Pay it down really fast. And there's a few ways you can pay it down. You can make extra payments, 2 mortgage payments a month. That's what I did when I had a 25-year note. I killed it in a little more than 8 years. And there's other ways you can pay down your debt very rapidly, but you do want to extinguish that debt. You don't want to be permanently indebted. and try to figure out a way that works for you. And if you're really stuck, no, I'm not going to do this. I'm not going to go anywhere near this, because I found it on Etsy, and I was pretty surprised. Now, I really don't know what to say about this. I don't have any debt. I don't need these services. But somebody's spelling a sorcerer, I guess, is selling spells to banish debts. And he or she, or whatever pronoun you use, has a wide variety of spells for debts and other things like that. My gosh. Now, this one in particular, the reason I'm not going to say anything pro or con, I'm just pointing out, they had sold 3,500 of them, and they were rated for 4.5 stars. And it cost $28.50. So I don't want to end up on the sorcerer's bad side. Maximum respect, Mr. Sorcerer or Miss Sorcerer. Yeah, I'm not sure. People are buying it. People are giving you 5 stars or very high stars. Like I said, it was 4.5 stars. And they had done a lot of business, so I don't know. It's just very, very odd. So still, the best way to finish your debt or to kill off your debt is to work for it. And if you got an opportunity like I had in investment banking, well, you know, it was a little bit different when I was at Deutsche in New York and even over here. We just sort of worked all the time. And as I shared many times with people, I would go to work on Monday morning. I wouldn't come home sometimes until Thursday morning. I kept a sleeping bag underneath my desk on the trading floor. I would sleep in a meeting room every now and then. Just catch a few hours sleep, go into the men's room and take a shower, a shower in the wash basin, you know, washing out your pits and shaving, putting on a clean shirt, going back to work, getting into it. So yeah, you can work half days here. Which half day works better for you? And that wasn't really a joke, and neither is this a joke. You got to be extremely careful now. The FCA, Financial Conduct Agency in the UK, and this is maybe an example of another reason why people think the British don't have a sense of humor. I don't know what to say, but the Financial Conduct Agency here in the UK has classified crypto memes as financial promotions. And so you could run afoul, depending upon what you say in your joke. I don't know what to say about this. I can understand they're trying to protect people, but it's a little heavy-handed, I think. It's really fascinating. But regardless, we're all here to make money. And just think of two different asset classes, commodities and stocks. Think about the S&P Standard & Poor's Commodity Index versus the S&P 500, the Standard & Poor's 500 stock index. If you calculate a ratio, if you divide the S&P 500, the price of the S&P 500, by the price of the commodity index, you end up with this ratio. Very interesting when you look at valuation, relative value. I love looking at this stuff. We're going all the way back to 1970. And you can see in the oil crisis, you can see in the Gulf War, you can see in the financial crisis. Yeah, interesting what was going on there. Compared to the tech bubble, compared to the COVID pandemic. Think about the price of commodities now, just a little more recent years. During COVID, commodities cratered. What did stocks do? Oh yeah, they soared. They really did. So it's really fascinating to think about this. And I do lots of stuff with relative value. We won't get into it too much right now. But according to this model, stocks are expensive, commodities are cheap. And I'd invite you to do the same type of thing. You've got the two indexes there, the S&P 500 and the S&P Goldman Sachs Commodity Index. So what you can do is you can actually duplicate this for the Wilshire 5000, the Russell 2000, measures small cap stocks. The Russell 2000, of course, is all the stocks traded in the U.S. markets. And you can duplicate it for the NASDAQ and see what you come up with. It'll be really interesting to see what happens there. Now, we had the launch of the Bitcoin ETFs, and for various reasons, a little underwhelming compared to what people expected. I would only draw your attention to this. You can't judge it by the first month or so of trading. Look what happened here with gold. When the first gold with ETF was approved, how gold went on a tear. And over the next few years, I think this ran up until 2014, gold was up some 500%. Now, some people down here are saying Bitcoin, blah, 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 200 to 1,000%. I'm never comfortable with level estimates, guys. I do like the trend. exhibited by that chart, that graph. In other words, up. I can agree with that. And I also like the way it's jagged, because we know Bitcoin is one volatile asset. And that's why I always tell people, buy Bitcoin for fun. Because if you get too serious about it, holy cow, you're just going to drive yourself nuts. And there's really no need for that tension. So you buy today, it crashes 80%. That's just what it does. It's entertainment. Just buy some more at the discount. Just keep buying, guys. That's worked for me. I've been buying Bitcoin every Friday for almost 10 years now. And yeah, Bitcoin is higher than when I first started buying it. I'm confident that if we go forward another 5 years or 10 years, Bitcoin will be higher. Not in a straight line, a jagged line, but it will go up. Got no doubts about that. And once again, plan B. Lots of time for this gentleman's work. He came up with the stock to flow model. And he's got the original model here right now. And once again, color-coded with some of the other things we've looked at. You can see here that blue is an accumulation phase. Red is a bull market. Yellow he phrases distribution. That's when a lot of people sell. And green is a bear market. According to his model, we've come, and on the right-hand side, check it out. According to his model, we've come out of the bear market and we're moving into an accumulation phase. And then the white line or gray line behind it talks about the predictions by the stock to flow model. So you can see stock to flow model correctly predicted the spikes that happened around the halvings, 2016, 2020, and it forecasts a spike in the value of Bitcoin in 2024. Well, we've seen enough halvings to realize something unusual goes on there. And it's reasonable to suspect that it may happen again. I certainly believe it will. That's why I buy Bitcoin every Friday. You should too. All right, guys, thanks for your time this evening. You're going to have an awesome week. You're going to make buckets of money. Just keep the faith. Take a look at stocks. Be careful buying. A little bit of valuation troubles going on there. But as long as you get the yield you want from the dividend-paying stocks you purchase, no worries. If you ain't getting a dividend, why in God's name are you buying it? Take care, guys.